The stock market's had a solid start to the year, up 4.3%, but the asymmetric portfolio, which is the portfolio that I'm building from scratch here on asymmetric investing, that is up 22.1% for the year. In the past year, the portfolio is up 55.7%. That's as of the close of trading on February 18th. I reveal that at the beginning of each month. But I do want to go through 5 stocks that I really like right now. They have a nice combination of value and growth potential, and of course, the one thing I'm always concerned about, a really, really solid strategic position. So that's what I'm going to cover today. I'll be right back with that after this word from public.com. All right, if you are serious about investing, you need to know about public.com. That's where you can invest in everything from stocks to options, bonds, and even crypto. They even offer some of the highest yields in the industry, like the bond accounts, 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools that you need to make informed investment decisions, like their built-in AI called Alpha. It doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Now, Public is a FINRA registered, SIPC insured, US-based company with customer support teams that actually care. The bottom line, your investments deserve a platform that takes them as seriously as you do. You can fund an account in 5 minutes or less at public.com/ASYM and get up to $10,000 when you transfer in an old portfolio. That's public.com/ASYM. This ad was paid for by Public Investing. Full disclosure is in the video description. The first stock that I am excited about, have been adding since late in 2024, is Lyft. Lyft is the smaller competitor to Uber, but it's trading at a much more attractive valuation, about a fourth of the price to sales multiple. The company is now also profitable and generating positive free cash flow. And you can see that all of their metrics are just moving steadily in the right direction. Not a fast growing company, but steadily improving. And with a market cap, as I'm recording, at $5.6 billion, enterprise value to sales is just 0.8. Price to earnings multiple on a forward basis is only 12.5. But what's most important about Lyft is what they could become in the future. That's with their partnerships in autonomous driving. They have 2 major partnerships. One is with Mobileye. That's the company that's providing technology to automakers all around the world. They're probably the company that you have in your vehicle today providing advanced driver assist systems like smart cruise or lane assist. So relatively simple systems is primarily what they're selling today, but they're developing systems that will all go all the way up to level 4 autonomy. They're testing that in the US and Europe, and have partnerships with Volkswagen, which is the biggest automaker in the world, to get that on the road, likely by the end of this year or next year. And Mobileye vehicles are going to be Lyft ready. So basically, when full autonomy is ready to go, there's going to be millions of drivers that are going to be able to turn their vehicles into Lyft vehicles if they so choose. Lyft also announced a financing partnership, so fleet owners will be able to finance their vehicles much more easily, and those fully autonomous vehicles will be able to make money on the Lyft platform. And they have a partnership with May Mobility that is going to be launching likely later this year, actually put fully autonomous vehicles on the road that you can get through the Lyft platform. So a nice combination of value, and I think Lyft actually has an easier transition to a fully autonomous world than Uber does because it's the second place player. It's a much smaller business, much less supply in the market. So they can basically say, you know what, we're going to we're going to go all in on autonomy. And that could give them a really solid position in the ride sharing market. The second stock on the list is SoFi. SoFi has actually been a very successful investment in asymmetric investing. I'll put the spotlight article I did on SoFi, and I'll actually include that for Lyft as well in the show notes below. But SoFi, I think, is still a really misunderstood company. SoFi is technically a bank, and that's how a lot of investors want to look at a bank. You want to look at things like price to book value, price to earnings multiple, but this is not your traditional bank. They don't have the same limitations as traditional banks. Typically, banks are going to be limited by how much capital they have, and that's going to limit how much they can grow because they need to generate return on the assets they have on their balance sheet. But SoFi has moved to selling a lot of the loans that they're originating on their platform, making them much more of a technology business and allowing them to scale even further. So there's been a couple of partnerships. One of them was for $2 billion last year to use their loan platform to originate loans for an investor. So there's plenty of money out there, billions and billions of dollars, that's just looking for yield, just looking for a little bit of a return on the capital that they have. And so SoFi is able to provide that through their loan platform, whether that's personal loans or student loans or mortgages. They're basically able to originate those loans, get a fee for that origination, and then offload that risk to those investors. And then they can continue growing the business in that way. So as they add members, they're going to add more demand for all kinds of different types of loans. They're going to be able to service that basically with other people's money. They also have the technology business, which continues to grow. They said they signed a couple of interesting partnerships, one with the government, and that's going to start contributing to the business about a year from now. But the technology business is basically allowing companies to white label banking or credit digital banking solutions that SoFi is putting into place. So if you want to offer a debit card or a savings account, but you're not a bank, you're a company like H&R Block, that's one of their partners. That's actually done by SoFi, and they're just white labeling that service. So SoFi is going to get a fee for that. And again, that's another very, very scalable business because there's really no limit on how big that business can ultimately be. The third business is really the growth driver for SoFi. That is the financial services business. Financial services growing nearly 100% year over year right now. And that's everything from stock trading to checking and savings accounts to credit cards. That's a huge growth driver for them. So they're going to get the fees that banks typically get with credit cards. And that has become a pretty high margin business as well. So you add all of these things together. SoFi has three phenomenal businesses, three great growth businesses. And I think Anthony Noto said on the most recent conference call that they were going to plow money back into actually advertising to help grow the user base. This is one of the few companies where advertising is actually a very effective way to grow the number of users and grow the assets and demand on the platform. So you see things like their SoFi Stadium deal in Los Angeles or the TGL League, the new golf league, which has SoFi plastered all over it. Those are going to be phenomenal draws for new capital and new business for SoFi in the third company is Mobileye. I talked about them briefly. And again, I'll put a link in the show notes to a spotlight article I did on Mobileye, but this is really the horizontal services provider in autonomous driving. So they're not going to make vehicles. They're not even going to sell a lot of hardware. There's a couple pieces of hardware they sell. They sell a chip, and then they sell a imaging radar for kind of more advanced systems, but they're going to be selling a service to other automakers. So other automakers who are now feeling a lot of pressure to get into autonomy, they go, what in the world are we going to do? One of their easy answers is just go to Mobileye and say, you know what, we need a level 3 autonomy system. We want to make it look like our own. We want to make it drive like a vehicle that we would make drives. And Mobileye can do a lot of that, all the way from very simple ADAS systems all the way up to what they call their Mobileye drive system, which actually doesn't have a driver in the seat at all. Now, this business and the potential growth of this business hasn't really shown up on the company's income statement yet, but they are starting to sign deals. I mentioned Volkswagen is a company that they're already partnering with. Same thing with Lyft. That's going to result in increased demand towards the back end of this decade. And we're going from $50 to $100 per vehicle to potentially thousands of dollars per vehicle for autonomous hardware and technology. And that's really where the company is going to see long-term growth trends. In 2025, I'm expecting to hear of at least a few new partnerships from Mobileye. I think that's going to continue the stock's march higher. And this is one of the few companies in autonomy that actually has vehicles that they're testing on the road today, and they have the business model to service other OEMs. Most other companies are OEMs themselves developing technology. This is the one company with a horizontal business model. I think that's going to be a really valuable position in autonomy long term. Fourth company is much more speculative. The most speculative on this list today, that is Joby Aviation. Joby Aviation is building a vertical takeoff and landing aircraft. They actually haven't really launched their services, expecting to do that later this year in the UAE. But I think this isn't one of those opportunities to develop an entirely new market. And what we see from them today, the point-to-point kind of air taxi business that they're building, I think that's just the start for them. I think the future is going to ultimately be making air travel and a little bit longer distance Ubers or Lyft rides, if you will, much more accessible. So if you think about going from Los Angeles to San Diego, or even Los Angeles to San Francisco, from New York to Philadelphia, those are trips that take time, whether you're driving or whether you're taking a relatively short flight. But if you can just hop on a vertical takeoff and landing aircraft like Joby Aviation's, that's the kind of thing where you can maybe pay a premium, and those could take off very regularly and land in many more locations than you can currently land an aircraft today. So I think that's ultimately going to be a very big market. Like I said, much more speculative business, but given the potential disruption coming from Joby Aviation and the aircraft that they're developing, I love the position that they're sitting in the market. And the final stock today is the real value stock among these stocks. That is MGM Resorts. MGM Resorts runs about half of the casinos and resorts on the Las Vegas Strip. They have 2 resorts in Macau, a ton of regional resorts in the US, and then they're also building a property in Japan, which is going to be the only casino in Japan that will own about 40% of that. So I think you're going to see much more demand long-term going to these destinations as more people are working from home, as more businesses are remote, or people are far-flung all around the world, whether that's from work or personal relationships. We're going to need to have more central places to meet. Places like Las Vegas, Macau, and Japan are those kinds of places. So I think demand is going to continue to rise, and it doesn't need to even rise all that much for MGM to be a phenomenal investment because it is actually a great value stock today. Management went over this in their last conference call that if you pull out the assets that are publicly traded, which their Macau property is, the company actually only trades for about 4 times adjusted EBITDA. That's a proxy we use for cash flow. So that means that management can buy back 15 to 20% shares of the shares outstanding each and every year and still have plenty of cash to invest in their iGaming business that should start to be profitable in 2025 and make investments in new resorts, potentially looking at a casino in New York and the casino I mentioned in Japan as well. So you get a great value and I think a phenomenal strategic position, positive cash flow business, just churning out cash year after year. And I don't think anything is coming to disrupt that physical location and those meeting locations. Remember, most of the revenue in Las Vegas is not coming on the casino floor. It's coming from hotel rooms, from restaurants, from clubs, all the non-gaming activity that has become so popular. So the 5 stocks that I went over today: Lyft, SoFi, Mobileye, Joby Aviation, and MGM Resorts. Let me know what you think about each of those. I will put the spotlight that I did on a few of those in asymmetric investing. I'll put that in the show notes, so take a look at those. And if you want more from me, sign up for asymmetric investing. Like I said, there's a free version and there's also the premium version if you want to get access to the asymmetric portfolio, which is absolutely crushing the market over the past year. But I will let that performance speak for itself. And of course, check out public.com. They have some great deals. So check out the link I have in the show notes as well. And of course, subscribe here on YouTube. Thanks for watching, everybody. See you next time.